Welcome to Do the Talk podcast. This is your real estate podcast that teaches regular people like you how to invest in real estate. If you would like to learn and grow in real estate investment, you have come to the right place. We are committed to make real estate investing seamless as much as possible. I am your host, Ibrahim Ojerinde, and my co host is Ahmed Lawal. Ahmed, how are you doing today?
Feeling fantastic. Just the code is beating me down. I've been sneezing all day. Our audience will be able to um understand this. So bear with me. The throat is kind of dry right now. But you know what?
Sorry about
It's cold outside,
that.
but we are going to be bringing heat in this episode because we
Yes.
have another person joining us. This is a very big fan of this podcast, and he is very, very knowledgeable. We are very thrilled to be able to bring him back. We have brought him once before now, and on that day, we promised to bring him back because he dropped a lot of fire that day. And we are bringing him back today to make sure that you guys have another blast and another good episode. But keep in mind, this is not a get rich quick scheme. I want you to understand that everything we preach on here, you will have to put in the work, actually get the results. So, without a further delay, I would like to bring on stage Mr. Damola Uluomo. How's it going, brother?
How
What's
you
up,
doing,
everybody?
sir?
Hello. How you doing, guys?
We are doing well. We are happy to see you today. Like Amin said, you are very knowledgeable, and we always feel that good energy whenever it comes to this podcast. And I'm sure our audience they are, you know, eager to hear from you today. Um, Today we are looking at a topic, and we are very confident that you can help us to shed more light into this. In fact, our audience they will benefit from this enormously, and uh, we're happy that you are here today. So we want to look at a topic which is business strategy in real estate. Um, of course, it's a wide, broad topic, but we'd
Mhm.
like us to would like you to dive into it and let us know how people can benefit being a strategic business person. How can you really, uh, protect yourself? How can you be a proactive investor towards aggressive lawyers and just angry or um, tenant or people that are just looking for your downfall. You know what I mean? So we would like to hear from you, sir. How can you can go ahead.
Um, thank you again for having me. You know, I'm a big fan of the podcast. So if I'm not on the screen, you know, I'm in the chat, just just watching. You know, so I'm happy to be back. In fact, I'm excited about what we want to talk about. For anyone that does not know me, my name is Damola. I help investors source real estate deals in central Indiana. So if anybody's looking for investment properties, most likely off market, you can reach out to me or reach out to Ahmed Ibrahim. They can connect you with me any day, anytime, and hopefully we can help. So, what we want to talk about today is business structure, right? Especially around real estate. I'm kind of familiar with this because as somebody that sells deals to investors, I need to know how to find them, right? I try to go deep into finding these investors so that I can put my deals in front of them and hopefully somebody can buy it. So I think I have a little bit of idea of what we're talking about. And before we move ahead, I just want to say it's a public service announcement. None of us on the screen is an attorney.
Oh, sure.
None of us is an attorney. We are only giving you opinion on what we have done personally or what we've seen people in the business they do. So whatever you hear today, you need to still try to contact an attorney or a legal practitioner that can also guide you in the right direction. Uh,
Correct.
God. So looks like we need to just keep it rolling. There are just a few things that I want to mention today when it comes to like business structure, right? Especially as an investor, you want to save yourself from a lot of things, especially because this is America. You can get sued for as little as anything that you can imagine. Even you can get sued for what you do not imagine, right? So we need to try our best to protect ourselves, and not only ourselves, we need to protect our investments as well. You don't want to spend all these years gathering all these properties into a portfolio, and one day you just lose half of it or you lose it all due to very something very negligent that you could have taken care of a long time ago. So those are the things that we want to address today. And like I said, we're not nobody's an attorney here. We just want to share what we know and what we think can help you. Before we go into it, I don't know if any of you guys have any thing to say before.
Absolutely, D. Thank you for the introduction. Even though we know you, it's good that you you reintroduce yourself to our audience.
Mhm.
Um, one thing that we want us to start with is when we're saying business structure, what does that even mean? Why do you need it in real estate?
So business structure basically means how you set up your business, right? There's a lot of parts in setting up a business, right? Although the major purpose of setting up a business is to make money, right? But at the same time, you want to, lay the right foundation for you to keep the most money that you can in that business. And for you to be able to do that, you need to start operating with business entities, business entities like limited liability partnership. We have limited liability corporations. There's a lot of kind of corporations that you can set up, but the most common ones are just LLCs that people set up to protect themselves, and not just to protect themselves. I have a few things that I want to mention, and then we can go into the proper way to structure your real estate business. I want us to focus on
Mm.
the real estate because that's why most of our your viewers are here. So I'm going to talk about just four. I should just say four things. There are a lot of benefits to structuring your business the right way. Right, most of us start out as sole proprietors. We just do everything in our name. We don't have any entities that we do business with. But along the line, we need to grow and develop and become professional basically. And you appear professional when you have a business name, you have a brand, you know, you set up a business account, you can get access to funding, you know. Um, yeah, so I don't want to jump, I don't want to jump the gun. So first thing I want to talk about is limited liability, right? Which is asset protection, right?
Yeah.
When you have a property and it's in your name, it's public records,
Yes.
right? Every dictionary, anywhere they can look it up and see, oh, this is the guy that owns this property. I mean, if it's a property that you live in, I don't think there's any issues with that because I don't believe any complications can come from that. But once you start having investment properties, you want to protect yourself. You want to protect yourself from tenants. You want to protect yourself from HOA. You want to protect yourself from a lot of things that can happen out of the blue, right? So one of the things that having a business structure can help you with is asset protection, right? Asset protection helps you to separate your personal life from your business life. It separates your personal wealth from your business wealth. So if anything happens to, let's say, for example, you have a rental property and a tenant sleeps and fall, right? I can tell you the next day that tenant is going to have attorneys calling them out of anywhere that I think you may have a case against your landlord, right? So and these lawyers, these attorneys, they will do everything to get you. They will do everything to get you because the more money they can get out of you, the more commission they get out of that pay.
Yeah.
So they will do everything in their way to make sure that you pay, right? But there's something that is called a corporate veil, right? It's just like when you're about to get married, the wife comes out with her face covered. That
Mhm.
is, what they call a veil, right? So until when everything is done before you are able to see who is behind that veil, right? So you want to have a corporate veil that protects you, that separates your own personal life from the business. So even if a tenant sleeps and fall, they can only take what belongs to the business. They cannot take what belongs to you personally, right? So that's one of the major things, major ways that having a proper business structure can protect you. And you can imagine it could be as little as anything that anybody can sue you for in America, you know. So and when they come at you, they want to get everything that they can. So first thing that I mentioned is limiting your liability by protecting your assets properly. Separating yourself from your business, right? The second thing, very beneficial to having a proper business structure is tax flexibility and tax benefits, right? If you if you operate as a sole proprietor, right, you may not get some benefits that a business would get, right? As a business, you can write off all your expenses, you know, write off everything, and you can just write off as much as the IRS code lets you to write off. I'm not a CPA or a tax attorney, but at the same time, when you have a business, there's something that's called pass-through taxation, right? Which means that you are avoiding being taxed in two different forms, right? You get your business tax and then you get your personal tax, right? But if you set up your LLC, your business structure very well, you do the pass-through you get taxed with the pass-through LLC. So you don't get taxed two times, right? So you get taxed on what comes out as profit out of the business. So after you deduct all your business expenses, you know, and then what you take home is what you get taxed on, right? So you don't get taxed on the business and then get taxed personally because you have your business structure solid and good to go. So we've talked about asset protection as far as liabilities, and then second thing is tax flexibility. You can save more money filing as a business because you are able to deduct. I think the maximum deduction you have as an individual, depending on your tax bracket, is like $12,500, right? So no matter what you have, your maximum deduction is like 12.5, right? But as a business, you can deduct as much as you spend before your taxable income. So I have a few people that live off of their business, right? The clothes they wear, every day is branded with their business. So they get to write that off because it's a business advert, it's an advert for their business, even though they wear it on a day to day, but now they don't they don't technically pay for what they wear just because it's branded with their company name or company logo, and they can get to write it off on their taxes. So even as little as what you wear, what you spend, your pen, your paper. I went to a meetup and I got these flags. You can see it's branded with the company, right? I'm sure this guy wrote this off
Yeah.
on their taxes, so it kind of saves them money as far as expenses as well. The third thing that I want to mention is easy transferring of properties, right? Like let's say you have properties when you pass away, and you want to leave properties to your kids. There's something that's called probate, right? And sometimes probate costs money. You need an attorney to get it done for you. Uh, you know, it could take I think in Indiana, it's about 3 to 6 months, depending on how soon you can get your court dates, right? So, you want to cut that time short, and then so that everybody that you leave the properties for behind, they don't have issues after you leave, right? So in those cases, there's something called a trust, right, which allows you to transfer your properties to your heirs without having to go through probate. And some people will say, yes, what if I have a will and I will the property to my children? I put it in my will that it goes to. Even if you have a will, you still need to go through probate. The only time you do not have to go through probate in Indiana is when one, the value of the property is less than $50,000, and the value of the estate itself, everything that you own that you want to transfer to your kids, is what is less than $100,000. So including the house, including the cars, including the money in the bank, if everything is less than $100,000, they let you go scot free without going through probate. And then the property itself has to be valued less than $50,000, right? In that case, all you need to do is file a small estate affidavit. And even that, it can take, if you want to go through an attorney, it can take like 30 to 60 days or something like that, right? So, but if you have a trust, you don't need to go through probate. So that's another benefit of, having a proper business structure for your real estate investments. Right. The last one I want to mention because of time, there are a lot of benefits that comes with, having a good business structure is a professional image, right? When you set up a business, you have an LLC, is recorded at the Secretary of State. People can look up the business, they see you're registered with the state, and it gives you a form of credibility, right? Especially when you're dealing with tenants, rentals, and stuff. You don't want the tenants to know that this is directly my landlord, right? You just want them to say, okay, you represent the business and you're here to take care of things. So you want a professional image. You want to show your level of professionalism and credibility that having a proper business structure can get you. So those are like four core things that I think that are important. But there's a lot of more benefits that comes from having a business, having a business structure. So those are four things I think that are important right now.
Thank you for all this, all the knowledge that you have dropped down now. I'm sure our audience would like to know a little bit deeper, and I'll start by asking you, yeah, everything you've explained to us now, it sounds like oh, I have to call a lawyer. A lawyer will tell me I need to meet up in the next 2 weeks. They'll charge me $3,000 to meet them. After that, they will tell me they will go to court. When they go to court, whatever the judge says, it will determine if they charge me another $7,000, or after the $7,000, they'll put in the application. After they put in the application, it will take another 3 to 4 months. They will let me know, or maybe when they let me know, I might have to pay some consultation fee again to do all that. So my point here is that we would like you to give us a little more. I mean, you've already put in the disclaimer. None of us is a lawyer here, and we are not acting like a lawyer. But can you simplify a little bit? If does it is it expensive to do all this, or because it sounds like it's more of like a, something that involves a legal team where you have to do this and do that,
Mhm.
and it sounds so huge in the ears. If you don't know how it run and how it goes, can you educate us a little more? Is it something that will make us break the bank, or is it something easy to do, please?
Uh, I mean, setting up an LLC is not expensive, right? But at the same time, quality service for quality service, you need to pay good. You know, for
Sure.
very quality service, you need to pay good. You
Sure.
can you can set up an LLC by yourself.
Okay.
State of Indiana is only cost you $99
Oh,
to
that's
set up to set up
affordable.
to set up your LLC. But if your LLC is going to do business on Amazon, right, just sell some stuff, yeah, you can set it up yourself, right? But if you want LLC that does real estate business, you don't want to do it yourself.
Correct.
Believe you me, you do not want to do it yourself. You can either get a registered agent that you pay like maybe $120 a year. There's some cheap ones for like $45 a year to set up that LLC for you, right? So, and they set it up in a way, and you want to let them know, listen, I want to set it up in a way whereby I'm not on the paperwork. I don't want to appear as the owner of this LLC on the paperwork. So it comes with two charges. They will charge you for the price of the LLC itself with the state, and then they will charge you for their own filing fee for doing the paperwork, right? So I don't think I think for like less than $500 you can get that done.
Okay. Okay.
Well, well,
Literally that's what I'm asking for. Like, because with the way you wrap everything up, the benefit, the value, it looks so huge. Like, oh, I'm about to pay 7 grand, or you know what I mean? And with lawyer fees and everything. So
mhm.
that's why I want our audience to know that even though the benefit is enormous, it's huge, the cost is not that big. That's what I want our audience to kind of understand
And
before.
one thing I would like to address is there are a lot of people that will say, yeah, I don't care. You know, I can set it up myself and just pay $99 and do that. My question to them, and I know Ahmed has heard this question quite a few times, is do you do your oil changes yourself? No, you don't fix your own teeth yourself, right? There are a lot of things you don't fix your cars yourself. You don't, except that's what you do. So it's better to have like a professional, help you set up your LLC. Shameless plug. I don't have anything to do with this company, but I use a company called Prime Corporate Services, right? They are very vast at setting up LLCs. They will tell you the best way to set it up, and then they will guide you on how to do it. Right? You don't have to use them. You can use a very local registered agent to set up the business as well. But I just like Prime Corporate Services because they are very, very knowledgeable about real estate itself, right? Not every registered agent that sets up LLCs know exactly how to set up an LLC that is going to run a real estate business,
Sure.
right? And then these people also help you to come up with operation agreements that you need to operate the LLCs. So it's always worth the money to spend a few $100s to hire a professional to get it done. There's an attorney here in Indy that's called Jeff Jinks. I don't know if any of you know him. He does set up LLCs as well, and they're very very good, and they're knowledgeable in the business as well. So that's what I would say as far as the pricing of setting up an LLC. And wherever you think you start, there's always an higher level, right? If you think you're somewhere you're maximally protected, there's higher level, right? Maybe I can just oh, I missed one more thing. The fifth thing I wanted to talk about is benefits of setting up an LLC is funding, business funding, right? Sometimes if you go to the bank and you need like business credit to help your business, no matter who you are, you cannot get enough funding as much as an LLC. If the bank is ready to fund you $10,000, I can bet that they will fund your LLC $50,000, right? So that's one of the benefits of having a well structured, or maybe just having an LLC, is getting access to more funds than you would regularly have to help your business, right? So I forgot to add that in there. So back to setting up the LLC itself, right? Anonymity is very very important, like we mentioned, right? You don't want somebody to look up your LLC and then they find you, right? Your tenants can look you up, and it may be they may plan something against you. Maybe you increase their rent and they don't want it, and they can just do something malicious, and then everybody knows that this is the guy that owns this property, right? You don't want to do that.
Yeah.
So the best way that I know currently to set up your LLC is there are four states that protects the owners of that LLC. They do not list the owners of the LLC on public records. Every other 46 states, they require somebody to be listed on that LLC filing when you're filing your LLC, right? These four states are Delaware, New Mexico, Nevada, and Wyoming, right? I think the most common one you hear about is Wyoming, right? Because they do not also have state tax, right? So, when you set your LLC up out of there, you want to set it up in those four states as a holding company, right? The proper structure that I tell people to do is you want to set up a trust at the top of the structure, and then this trust is going to have a holding company right under it, right? The holding company, or what the holding company does is the holding company owns other LLCs, right? That's their main purpose. That's the mother LLC that gives birth to every other small LLCs that you have. Because sometimes you don't want a lot of properties in one LLC, so you also want to have maybe two or three properties per LLCs, right? But that LLC has to be owned by your holding company, right? So that holding company serves as just an entity that owns other entities, right? So when you start from a trust, you don't have to have a trust. A trust is not necessary when you're starting out, but you need it for transferring, when you want to transfer the real estate, or when you need more tax benefits. you know I do not have an idea more about to go into trusts, but I know having a trust is important, and then you want that trust to have a holding company, and that holding company is what is going to have other LLCs. You know, and I can break it down this way. When, let's say, you have a Do the Talk LLC or Do the Talk Holdings as the holding company LLC, right? So Do the Talk LLC, which is the holding company, or Do the Talk Holdings LLC, we now have a property management company. We now have other LLCs that holds property, right? So everybody reports to the holding company. And here is why. When you set up the holding company, you do not appear as the owner, right? You used a registered agent to set it up, right? Now, when you're opening your local LLC, because you need that holding company to come out of those four states, one of any of those four states: Nevada, Wyoming, New Mexico, and Delaware, right? You just need one state. You can just use Wyoming for an example, right? So you get that one, and then when you come to Indiana, because you need an Indiana LLC to operate in Indiana, right? The owner of your Indiana LLC is going to be that LLC in Wyoming, right? And because that Wyoming LLC doesn't have a name of somebody on it, it means that there's no name will appear on your Indiana LLC as well. So you remain anonymous, nobody can find you, you know. Me personally, there are some buyers that I've been looking for, but because they set up their LLC very well, I've not been able to find them, right? So which means they did good. Even I'm trying to sell them a property. I'm not even trying to file a lawsuit against them or do something else, right? I'm trying to sell them a property, but they have their LLC properly structured, whereby you cannot find them except you kind of know them personally or you know somebody that knows them, right? So that's what the holding company does. Holding company holds other LLCs that now operate business, right? And one of the things that is even important is even when you have a holding company, you need an operating company as your first LLC, which means that is that LLC that is going to get the tenants, right? That LLC is going to get the tenants for one of your properties. So all your operations will come out of one LLC, right? That operation LLC, that operating LLC is going to operate your listings, is going to hire people, is going to do everything, right? But your other LLCs hold the actual properties, which means that if you have a house and you have refrigerator in it or your furnitures, you can let your operating LLC own all those things so that your LLC, where the property is, only owns the building itself, right? So every other thing is owned by your operating LLC. Your operating LLC hires managers, hires cleaners, right? They run the business. They own all the, how would I put it? They own all the appliances, right? So even if somebody comes for the LLC that owns the property, they would not be able to take the appliances because the LLC that owns the property is not the one that owns the appliances in the building, right? This is very important for people who have like restaurants, event centers that have heavy equipment, right? You want to separate those equipment from the business that runs them so that they don't take everything with the property. So somebody does not say, "Oh, you have this inside the property is going to go with the property." Ah, sorry, I'm sorry. Another LLC supplied us all those things that you see, so it doesn't even belong to our LLC. They need to go back to where they come from, right? So that even gives you more level of credibility, professionalism, and then you save yourself from all those any way anybody wants to come for you. So and then you can have multiple LLC that hold properties and stuff like that.
Thank you so much. It's been you have a question, Ibrahim? Go ahead.
Yeah, I'm so sorry. So my question is, what about if somebody already established an LLC, the regular LLC?
Hmm.
Is it now too late to go through all those steps of like getting a professional to see how they can help you put it, do some asset protection and all that? Is it too late, um or does it only apply to people that as not people that have not registered for any LLC?
So it's very good when you start with the proper business structure, right? But when you already started, because real estate is about taking action,
Sure.
right? Some people waste time setting up LLC and don't take action in actually acquiring the property, right? So kudos to anybody who have acquired properties without even thinking about their LLC because they took action, right? They took action and they will benefit from that action. But it can be fixed.
Okay.
You just need to consult the right company that can help you out. Some people will tell you you can set up the new LLC and just quit claim did the and just quit claim did it to the new LLC, right? But I think there's a lot of technicalities that goes with that I do not really have an idea of. But if you consult somebody that they know what they're doing, they can definitely help you transfer those properties into your new LLC without any traces.
Absolutely. Thank you so much, D. It's been a very great information since, and we do really appreciate. I believe. From what I understand is having a business structure as early as possible is key, and that is because that increase your professional capability to source for fund. That protects you as a owner, and what other thing? That give you tax benefits. You know, those are the key components that I've hold in my hand, and if not for any other reason, these are more than enough reason to learn more about business structuring. And even if you have done it before, like you said, there's level to this game, right? So keep pushing on it. Another part of business structure that I will like to dive into and put more clarity is uh, people mixing LLC and trusts. Can you quickly give us like the two different that what make these two different and what each of them serves?
So a trust is because, like I said, right, we're not professionals in that realm, right? We only buy houses, right? But I just believe that a trust gives you, aside from an anonymity, you can get a lot of tax write-off with a trust, right? You can get to transfer your properties to your heirs without going through probate, right? And it, even when you have an LLC, you can also transfer your properties when you have a regular LLC, because you can just sell that LLC to the person that wants to buy that property, and because the LLC owns the house, they get whatever the LLC owns. So at the same time, you still transferred the property, but you just sold the LLC itself. But a trust is different from an LLC. When you're dealing with trust is when you're starting to have kids, you want to build life insurance, and you want that life insurance to be attached to the trust, so that all your heirs can benefit properly from that trust. And in that trust you have something that's called infinite banking, because a trust can stand as its own bank, where you can get funding, you can pull money out of it. But we will not get deep into that, just because we do not operate in that business in that kind of business. So, but typically a trust lets you do more than a regular LLC. There's more benefits of having a trust, and a trust can also own multiple LLCs, like we described, right? Your trust can own your holding company, and your holding company can own your LLCs. Your trust can also buy properties. Your trust is a business entity on its own. right? It can do whatever any LLCs can do, but the trust just takes it to way higher level, way more protection, way more access to funds, more benefit than just a regular LLC. So if you have a more deeper questions about trust, you need to call a real estate attorney to to give you more answers to that.
I think our next episode will be on who do you need on your team. I'm gonna make sure that's what we do next, because we need to also explain that being in real estate means you need some people on your side. Being
Yeah.
in real estate means you need a good wholesaler like D. Being in real estate means you need a good real estate yeah, realtor that understand both investment and what your residential area part of things is doing, which is what Ibrahim here is for. Being in real estate, we just have all around on this screen at the same time.
Right.
Being in real estate means you need a good property manager. Being in real estate means you need a very good contractor. So I think that would be a very good
You
topic.
need a good title company. You need a good insurance agent. Insurance. Very, very
Yes.
important. So you
Yes.
need a good insurance agent on your team as well.
So yeah, that is very crucial. So if you want to learn more, please reach out to your attorney. And if you need any tax advice regarding LLC, please reach out to your CPA. So Ibrahim, do you have any additional or any question you want to put?
I'm trying to think what would be my question now to the, because he had dropped a lot of valuable information, and now I'm processing all of them, and I'm trying to see, if there's any question that might be very crucial to setting up this asset protection. And I think one of them will be, if excuse me, we are in Indiana, and we know that you know Indiana, we know that it's good to have this protection and all that. At the same time, Dee mentioned it. I don't want people to feel like that's all you have to focus on, or that will be something that will prohibit you from taking action. I want you to know that people are out there, they might sue you for anything, but the majority of the people out there, they are not just hunting for suing people. I want you to take action first. If you have the opportunity, you can set up your asset protection and go ahead and take a move, but do not let that hold you back. Don't feel like you have to do all this trust, LLC, and everything before you get into your business. You can go ahead and do your business, and while you are doing that, and make inquiry about how to protect the business. If you have the luxury to protect your business first, go ahead. We recommend that. However, it is more important to take action first than even worry about the protection. That's what I just want to add to that. That's what I have to say. So
That is a million
yeah,
dollar
I don't
advice.
really think I have a question. I just want to add to
That is a
what
million
you
dollar
said.
advice.
Yeah.
I because a lot of people are just looking for a way out. They don't want to do anything, and so they are just looking
Mhm.
for a way out. But yeah, the most important thing is action, action, action.
Yeah.
Um, to be successful, it's not something that's you can sit inside a planning room and spend 10 years designing what you're gonna do.
Yeah.
You have to actually go at what you're gonna do, even though you have no clue. But keep your open mind, and you will learn. You're gonna learn. It's not just a slang; it is actually the facts. As long as you keep an open mind, you are going to learn. You are going to learn, and you are going to make a lot of mistakes, and you're going to learn from it and move forward. So that is a key one, and thank you, Ibrahim, for bringing that up.
Thank you.
For me, it is very very crucial that we are talking about this because uh, asset protection goes good real estate business structuring goes even way beyond, just like D just explained to us, go way out of asset protection alone. There's a whole lot of other benefits that comes with it, and people need to know that that is there as well. If you do it the right way, those things are options as well. So that D. So I'm just gonna. I think we hit every, and we don't have any questions so far. So I think we hit everything that has to do with business structuring. One quick thing that I want to also let us dive a little into before our time runs up here is a lot of people are saying, now they are aware of Do the Thought podcast. They are listening to us. They are like, okay, I just learned about this. I'm so excited. I want to start, but I don't have money.
Mm-hmm.
I don't. Hey, can I, if I get my tax, how much do I need to save up? Things like that. Those questions are coming up. And each time I always tell the people that reach out to me, like, you don't need a whole lot of money. There are some other stuff that you can do in real estate that you
Mm-hmm.
don't need a whole lot of money to get into, and they pay handsomely. Which one of them is wholesaling. Under wholesaling, that is where we have driving for dollars and stuff like that. Do you want to brush up a little bit what the process is like? How much do you actually need and stuff like that?
So to start wholesaling, and I think the very basic is starting to drive for dollars, right? I think until they tell you you are always driving for dollars, you do not just pay attention, right? Because every time you drive around, I'm sure you drive at around, if you drive for 15 miles, I think you'll come across minimum 5 to 10 distressed properties, right? So the aim of driving for dollars, right, is to go out and identify properties that have physical distress. The roof, there's a tap there's a tap on the roof, or there are shingles falling off, the sidings are falling off, there's trash in the yard, overgrown grass, you know a lot of things that can let you know that, okay, this property is in some form of distress. So if somebody's driving around and you don't have money to go and buy a list, you can drive around and take these addresses down, and then you can start to call them. And driving for dollars is not what is going to get you the deal, right? You can drive for dollars and get 1,500 properties. If you don't try to contact the owners of those properties, it's almost as a waste, right? So it's very important that even when you drive for dollars, you need to take the next step by trying to contact these property owners, right? And in case somebody says, yeah, I don't have a car, I don't have a bicycle, it's snowing outside, I cannot drive, there's something called code violation in your city. Because when people leave their properties trashed out, the city will charge them a fee if they don't take care of it. So the city pays people. There are people on the city's tax money that they are paid to drive around to identify these properties, just like we would go out and drive for dollars as well. So if you don't have money, you don't have a car, you can call the city and ask them how can you get the code violation list, right? In Indiana, it's called the neighborhood services. That's where you can go to see properties that are on the code violation list. You get that list and you skip trace them, and you start calling. So, if somebody does not have money or gas to go driving for dollars, you can spend one day, $10, take the bus, right? Less than $10, right? Take the bus, right? If you have a bicycle and it's summer, you feel like you want to do some exercise, go with your bicycle, go with your skateboard, go with whatever you can. Go, and you can even just make a call the city, the Marion County Neighborhood Services, that hey, how can I get this list? When I wanted to get that list, I went to their office, right? And then they gave me the paperwork on how to get the list, right? So if that's the only day you have to spend money, it will cost you less than $10 to get a bus from anywhere in the city to go downtown. It will cost, I mean, maybe yeah, it will cost you less than $10, right? So you can get that list as well if you do not have any form of transportation.
I always like it when there is a charges to get a list, because what that tells me is little people will be having that list. When it is free, everybody want it, but when there's a charges, some people are very stingy that they will not even pay $20 to get it.
Exactly,
But
exactly.
don't let us deviate. I want the Ibrahim, or do you guys want to take the question, or I can take it?
It says, I have a mortgage in my name. I want to transfer the property to my trust. If I do that, what is the probability of the mortgage company calling the loan due? Hmm. This is a very, 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 very technical question. And I think Ahmed has may have more insights
Yeah.
on this one.
So there are so many things that can happen for due on sale to be called. So what you are actually asking is, what is the probability of my mortgage company calling a due on sale clause on me? So due on sale is when you sell a house that still have a mortgage on it, that the bank needs to be paid immediately the house is being transferred from your name to anything else, even LLC. Even though you own that LLC, due on sale can be called on it, because now you are the one that guarantee the loan, not the LLC. So there's a clause in the mortgage document that you sign that says you cannot transfer that house to someone or anything else except for you. However, doing it is not something that doesn't happen. It happens every day. In fact, today people do subject to transaction today. So it happens all the time. There are few things that if you do them wrongly, this is where subject to is very technical. I tell people subject to is technical because if you do them wrongly, if you make those wrong move, that will trigger due on sale. One of it is insurance on that house. I believe you own that trust. So moving your house inside that trust alone will not trigger due on sale. Moving that your house inside the trust alone will not trigger due on sale. So due on sale will not be triggered just by you moving that house inside your trust. So it is a potential. There's a potential that it could happen, and that is why I mentioned the number one thing that triggers due on sale is insurance. If you mess the insurance up, then that will trigger due on sale. Number two thing is you want to look at the how big is the bank. Is it a bank that is a local bank, or is it we are talking about West Fargo, Chase, Bank of America? If we are talking about bank of those capacity, they don't care as long as you don't miss your payments. The only time they check your record after the day of you closing on that house is when you miss your payments. If you are like doing something illegal in your compound, missing your payment is just like you calling the city to come and look at what you are doing at your backyard. So you shouldn't be missing your payments anyways. So what I'm trying to say is those banks don't care because they are big. They don't have time to be checking everybody that have a loan with them. They don't. But what if you have a loan with, let's say, KeyBank? Let's say you have a loan with, even Indiana member is big enough that they don't have the time to be checking everybody's loan, right? But let's say you have a loan with a bank that only have a branch or two in a city. You can be damn sure that they are checking on you every now and then, and that can trigger due on sale. So you want to make sure the bank that you have the house with is kind of like medium size to large. Then they don't care. They don't see it as long as you don't miss your payments. On this seat right now, those are the two things that I remember. I don't know if any. I know there are three key components that can trigger due on sale. So number one big one that always gets people is insurance. People just because now you have the deed in your name, you go and flex your muscle and go and change the insurance. When you change the insurance, what happens is the new coverage you are getting, those guys will send that new coverage to your lender. When they send it to your lender, and your lender check that, okay, we give the loan to D. Now the coverage is in the name of Ahmed. What's going on? That is pretty much you waking the hungry lion up. So there's a way you can do it. I know the follow-up question will be, but now the house is in my name. I have to keep the insurance on it so that I get the protection when anything happens. There is a way you can do it without triggering due on sale. That is where the technicality is coming in, and you have to be very careful and learn from people that have done it. So just if it is your trust, if it is your house on your name, moving it inside your trust will not trigger due on sale. So the chance is very, very low. But like I said, the risk is still there. So you have to be careful of these other factors that I know. There's the third one I forgot right now, but there's this third point that you have to be very, very careful of. So those are the things that can cause headache when it comes to due on sale being called on a house that gets moved inside LLC or inside a trust.
Yeah,
I'm not sure if anybody have any addition to that.
I think it goes back to one of the things we mentioned when we started, right? You don't do your own oil change yourself. You don't fix your teeth yourself. So I would advise the viewer that when you want to transfer that property into your trust, get you a very, very good transaction coordinator. Somebody that knows the necessary paperwork, the right way to do it, so that you can save yourself from, you know, any due on sale. I mean, you don't want to, because of less than $1,000, have to pay off a mortgage so quick, right? Invest in that few $100. Let somebody that is a professional, let them guide you or help you out in transferring that property into your trust. It's not just as easy as a quit claim deed and you think you're good. You never know. Like Ahmed said, just transferring the property into your trust doesn't really trigger the due on sale, but you just never know what bank it is. If it's a small bank, you don't know, maybe they're even checking every month, right? So at the same time, you want to save yourself from from stuff like that. Little things like that can just ruin your day. Imagine you're at work and you get an email that says you need to get that money, that payoff today, or we'll file a foreclosure on that property. That's not what you want to think about. You should be focused on just taking action and acquiring more properties and letting the professionals protect you behind your back. Right. That's major. Yeah, that's the only thing I wanted to add to that.
Quick one before we move on. So I also want to I hope our audience that has the question. This is a very great question, by the way. It's still on here. Um, just because due on sale is called, that doesn't mean it's going to be executed. There's other ways around due on sale. I've never seen anybody lose their house due to due on sale being called. Never seen one. I have hundred of friends that do this every single day.
If they have the right people around them.
Yes, that is the right statement to use. So it is not the end of the world. I mean, we are advising you to take both steps, approach this. But you have to keep in mind as well that you need to let people know what you are doing. Ask the right question before you do it. Weigh the risk and the benefits, and make sure everything even up, or even be the benefits way more than the risk before you take those actions. If, like I said, that is not the end of the world. But if you get a call like this said in the middle of your work day, like, hey, you have to pay off our loan because now the house that we qualify you for is no longer on your name. If you don't know what to do, then the panic sets in. You started running up and down. Well, there are simple steps you can take to make sure you can get those things resolved. That's not the topic for today. We already go over our time. But please reach out to me, reach out to D, reach out to Ibrahim, and we can talk more on this topic. So Ibrahim, over to you.
Yes, I just want to thank Dee for coming in tonight, and we really appreciate all the knowledge. We are very excited. Thank you so much. Um, how can people reach out to you, Dee, in case they want to contact you?
You can always call me. I'm not afraid to throw out my number. I want people to be able to call me. I have investment properties I want to sell. So 317-946-5840. I think I'm going to put that in the chat as well. Oh, I cannot do that because I did not log in my YouTube. But again,
Let me put call it again, D. Let me put it in the chat so I can.
it's 317
Oh,
946
sorry. 317-946.
5840. Yes, call me. You can text me if I don't pick up my phone. Maybe I'm on the phone with somebody else. Call me. I'm sure you know how to reach Ahmed. You know how to reach Ibrahim, and they can also help you out as well. So if you have any questions, let us know.
All right, Ibrahim. If people want to reach out to you, how can they reach
Uh,
you?
yeah, just you can DM me, IB Realtors, anything concerning real estate. I'll be more than happy to help. Back to you,
Absolutely.
Ahmed.
Yeah, I am your real and the baddest
Let's
property
go.
manager. Property manager. So just anything property management, reach out to me. We are trying our best to make sure your investment as passive as possible, and you are not over leveraging. You are providing good service to the tenants, as well as you are not such changing yourself, leaving money on the table. So that is why we are here for you. So you can reach me on official Hamed Lawal, or even give me a call, 317 689 7075. I just got that number, so don't judge me on that. All right, guys. Thank you, D. We really, really appreciate you. We will be bringing you back soon. So be
I'm
ready.
always happy to be here.
Thank you.
I like hanging out with you guys. If I'm not on stage on the screen, I'm watching. So I'm always happy to be here.
Thank
We
you, D.
appreciate the support. Thank you so much.
All right, guys. Until next week, be
Bye
safe
bye.
and make sure.
Stay warm. Stay warm.